Hi everyone, thank you for coming here and listen to our panel. Today we're going to talk about this amazing topic. And first of all, I'm Ciara's son. I'm the founder and managing partner for C Square Ventures. And I was the head of listing and investment for Hobby Global before. And very delighted to have this panel with our amazing panelists. Why don't we start with a round of introduction first?
Hey everyone, I'm Miles, co-founder and CEO of Decentral Games. We make Metaverse poker. Excited to dive into the Metaverse today. Thanks for coming.
Hey guys, David Shin. I am the global group head for the Klaytn Foundation based here in Singapore.
Hi everyone, I'm Beryl, co-founder at Illegal Games. I look after finance or treasury as well as legal as well. Good to be here.
Okay. So today we're going to talk about Metaverse in general, right? So since the beginning of the internet, people haven't stopped exploring the digital space. So with the new technologies such as AI, VR, AR, now blockchain, industrial internet, now the physical and the digital space has really integrated a lot. And today we're going to really divide our topic for the Metaverse in 5 different trends. So the first trend, we're going to talk about digital and real economy integration. And the second trend is emerging digital economic community. And third trend is the reshaping of digital identity. And fourth is a boom in digital culture. And last but not least, emergence of digital finance for broad society inclusion. So let's move on to my first question. The metaverse will boom with the digital economy to a new stage. So what do you think will the new metaverse economy look like? We can talk about, just general vision, or we can talk about specific use case.
So at Decentral Games, we thought that just building kind of games that people already knew how to play and really focusing on the consumer-facing application layer would be a great way to just accumulate as many users as possible in a space that's really nascent and mostly empty. And so we started with poker. We built a poker game in Decentraland and kind of grew that to around 5,000 daily active users currently, and which is roughly about 60% of Decentraland's traffic. And so from there, obviously these numbers are very small from a Web 2 standpoint, but in terms of Web 3, it's substantial. And I think as we continue to grow, we want to solve that kind of main problem with the metaverse is it's empty. And I think if you hop into a lot of these virtual worlds, there's not many other users. And so building applications that people actually like to play in in a social environment is kind of right where we wanted to get started.
Cool.
For me, I think the next iteration of social interactions that we have on the internet, in other words, where do we graduate from Facebook and Twitter? The natural evolution for me is in the metaverse. So it becomes more of a digital interaction further from where we are today in the Web 2 world of social activities. And then the other additional footnote to add there is those social activities can now really translate into more meaningful digital economic activities. We can look at things like bartering assets. We don't have to always interface into an exchange or a marketplace. And I think exploring that element of metaverse is really, really exciting because then we can truly start developing what I call digital GDP and the contribution to the wider economy. I think that's where it gets fascinating.
I believe there's going to be an evolution of games. So we've started with play-to-earn games in the metaverse, but we'll be seeing, so in theory, sometimes it works, but in practice, it's really different, right? And I think the mistakes in the past, we've learned a lot from these mistakes, right? So for example, in the past, we've not really accounted for speculators in the market, right? So the next iteration of token economics would have to consider that. Apart from games, I actually see X-to-earn applications. So there is going to be an incentive structure around learning platforms, educational platforms, which we call learn to earn. Then you get incentivized as well for exercising, like move to earn. And so we'll be seeing a number of these gamified applications in the space and moving to the metaverse.
Cool. Just to quickly add on to Beryl's point, I think economic in metaverse gaming is a very good example, right? So the start of Web3 gaming booming, we see Axie's play to earn model, and now we see like single token, dual token, and even multiple token going forward. We're all trying to upgrade the tokenomics for gaming so that it doesn't only work in up market, right? And we'll be able to attract more value and real contributor to the economy. And hopefully, guilds going forward will be more focusing on educational and informative materials rather than just having, all the players and attract value from the ecosystem. Great point. So move on to my next question. The economic community. So I think you guys will probably all know better than I do. So right now, with the new digital space and digital culture aspects of what's happening in the metaverse space, it's really upgrading the organizational form, right? We see new kinds of organizations happening with real incentivize for different contributions to the community, such as developers of the game, platforms like Klaytn, and even like organizations like DAOs and guilds and YGG. So what are you guys think about the digital community happening in this space?
So at
I'm
Decentral,
not with them. Yeah, I'm just watching.
I'm not sure who that was, but at Decentral Games, we kind of view our community as like a mini country, and so obviously within each country there's economic policy and different incentives in place to hopefully encourage the community members to be productive, and so as kind of Beryl brought up, in the past like year or so, a lot of these economic models were built on growth models, and once the market kind of turns a bit south and the growth stops, a lot of these in-game economies were not able to sustain. And so at DG, we're really focused on really providing value to our existing community, and so that even if growth stops, you still have a sustainable in-game economy. And so right now, we're launching new features to deliver that value to our existing stakeholders in our community.
The industry observation I've made is earlier on in Web3, the marketing budgets weren't as big for projects. I mean, they were obviously big for foundations and whatnot. But as marketing budgets grow and higher valuations are raised, I think you're going to see more projects, not just develop communities at the grassroots level, but actually pay for conversion where communities make sense to integrate. So at Klaytn, what we've done is to help out some of our gaming projects, we have invested in EVOS, which is the largest esports team in Southeast Asia. We've invested in Loud, which is the largest esports team in Latin America. And we're looking at a few others. We've been speaking to T1. And what we want to do there is we're willing to help with conversion costs where it makes sense to bring in new communities, to have them contribute to the gaming economy. And it makes sense for them as well because they're all looking for a Web3 strategy at this standpoint.
So the purpose of DAOs, or decentralized autonomous organizations, is to actually incentivize your community, right? The people that are actually going to be contributing within your new economy or within your new application, right? And at least with the Yield Guild Games, we've contributed 45% of our tokens in circulation to incentivize the community. So these are for contributors, these are for projects to incentivize the first few users of the platform, and so on and so forth, right? So this is one innovation of a DAO structure. And then the second point I'd like to make is Yield Guild Games was not a DAO on the first day. It was the founders that make most of the decisions. Then afterwards, as soon as they actually build the team, the decision making gets distributed within the team, and then you have investors, and then we have actually introduced the concept of sub-DAOs, which is a structure where it's like a distribution channel per region. So we have the Latin America sub-DAO, the India sub-DAO, and then Brazil, like Japan, Korea, and so on and so forth. But each of these regions are its own DAO structure or economy, where YGG, the association, think of it as an association, owns a percentage of each of these sub-DAOs, but they don't own the entire thing, right? The reason behind it is because we want to incentivize the localization within these sub-DAOs or distribution channels to make their own decisions, to raise their own funding, and to be able to really localize the structure of their own like DAO, right? So the association itself includes all these sub-DAOs or subcommittees as members of the DAO itself, right? So they're still part of decision making, like each of these sub-DAOs, in the future of how DAOs should be like, how each of them should look like. But at the same time, they could actually share their experiences in their local market. So I think this was a really important innovation for us at least as a DAO, as a Guild of Guilds, DAO of DAOs.
Yeah, very interesting. So I hear like regional communities and different kinds of communities, right? Users of the applications, institutional and retail investors, as well as developers and builders. So these are all our community members, and we come together and make contribution to our metaverse, right? Okay, so move on to trend 3. It's a very hot topic right now. Is digital identity. So avatars reflects your self-awareness, and when we see like all the users, they enter into a metaverse or a different application, the first thing they do is create their own avatar. And I'm curious to hear about your thoughts about the potential of digital avatars, digital identity, and even decentralized identity. We're seeing like different technologies and infrastructure that can really make it happen, like ZK technologies. So what are the views on this?
So yeah, digital identity is really key to the metaverse. It's really what the entire metaverse economy currently is based around. People, creating their avatar, dressing their avatar in clothing, naming their avatar, and all of these kind of items that they are able to customize their identity with are NFTs. And so I think we've seen in kind of the early days of the metaverse is kind of an economy built around these assets. And specifically that applied to gaming, I think it's really important to stress identity and stress kind of the social interactions because, as people play games and, we've seen play and earn and play and own different models, where people are able to earn these assets by participating in the game. It's important that the individuals earning those assets kind of have a tie to those assets and they want to flex them and show them off to their friends. Because otherwise, if they don't have this desire to kind of show them off, they're just going to sell them and exit. And we all know that doesn't end too well for the in-game economy assets. So it's a really crucial piece of all kind of metaverse games to have this like identity and to have a strong sense of items that you can show off on your avatar.
For us at Klaytn, we're really, really bullish on DID. One of the challenges in Web 2 is that there's no way of validating if your LinkedIn profile is really what it is. I mean, what stops someone from saying I was the CEO of Pando Acid, or there's really no concept of proof of me verification. And I think this is where DID becomes quite interesting because once you're able to do that, it extends into opportunities into the metaverse, but also it really starts decreasing some of the risks around catfishing in the metaverse and things like this. So I really like the concept, but more importantly, from a monetization perspective, once you have that footprint that you can verify, you can then start collecting a lot of social data around that and get into things like social graphing or what others call token graphing. And that takes, again, the sort of digital economy to another level where there's a lot of opportunities to monetize on data.
So this reputation and identity piece is really crucial to the development of the metaverse and Web3 in general, right? So it started with NFTs and avatars to accentuate your personality, right? So it's like in the real world, we actually dress up, we actually choose our own fashion to actually kind of like show who we really are, right? In the digital space, it's the same. It's about social status. It's about collecting all these rare items, right? Kind of like collecting stamps in the real world. And then it's also about, some of these NFTs are also a utility to be able to, for example, in games, you have these NFTs to be able to get into a next level or to actually help you, earn more rewards, right? Like in games. So NFTs in general and like avatars are kind of like necessary in the digital space, right? Or in the metaverse. So I don't think it will go away, but there actually needs another layer that would help really develop the NFT space further, right? And this involves the part that David was mentioning, like the social graphing piece, where you have reputation badges, right? You earn them, so to actually prove that you've completed a certain task, and then once you actually have all these badges, which we actually call soulbound tokens, right? You actually create your entire reputation that's actually sitting in a wallet. And then there's going to be another, how I see it is there's going to be another like privacy layer, right, which still needs development in the space. And then once you actually complete this identity, there's just so much applications that can actually build on top of that identity. It could be other forms of uncollateralized loans. It could be insurance, right? And this is where we actually see that there's going to be more development in this space. It starts with identity, I believe.
Yeah, I want to add on to David's point. I am a victim of the LinkedIn scams. So I was managing listings and investment for Huobi. There are many fake accounts for Ciara, so I had to cancel my own LinkedIn accounts. I don't have LinkedIn accounts, so just for the record, because people they ask for listing fees with fake accounts, and then there's no way to verify. So they come to my Twitter, and sometimes we can see the direct messages, but apparently Twitter can just cancel your accounts whenever they want. So I'm really excited to see DID really solve our problem right here. On to my next question. For digital culture boom, so NFTs has become the value carrier of digital culture. So I want to talk about an NFT, right? NFT use case. We see tons of NFTs. Volume are happening on the top 5 of the PFPs. So people use them as profile pictures. On the other hand, for gaming, people use NFTs as a better use case scenarios according to the gamers. So what are your thoughts on this?
Yeah, so I think just the PFP kind of movement was just the tip of the iceberg. It proved that these digital kind of communities could unite and have value these items that have meaning within its specific community. And for us at DG, all of our items in game are NFTs. And they have direct utility by giving you access to the game. Within the game, obviously, you can earn other items and kind of develop a reputation. And so, I think moving into that space, there's several projects that have been, in the gaming space that have, added this utility to these NFTs. And so I think, moving forward, I think that's kind of like the way, the direction I think it's kind of headed is just adding more and more utility to these NFTs within games and potentially even adding utility to existing NFTs. For example, like if we wanted to roll out and kind of bring in folks from the Bored Ape ecosystem, we can add utility directly in our game to Bored Ape NFTs. And we've started to do this with a few different partners as well at DG.
For us at Klaytn, we really like the idea of horizontal integration between games through creating NFT portability and in-game asset portability. Typically, games are vertically integrated. And so if I buy V-Bucks and I use the V-Bucks to buy a skin on Fortnite, once I get bored of that game, I can never extract that value. So you lose out on the utility value because it gets trapped. With NFTs, where it becomes interesting is, as we have more interoperability, we're able to create this horizontal portability with the assets. And I think this enhances the opportunity for utility value, not just with the NFTs, but in-game as well. So we're really excited about seeing a lot more technology being built around that. We're also really excited about dynamic NFTs. We work very closely with Chainlink on this and a few other teams, including Galaxis, a team that used to be formerly known as EtherCards. They were leading the drive in the dynamic NFT projects. We really see dynamic NFTs taking a strong use case in-game and even in the metaverse. If we go back to the idea of an avatar being represented by a unique mnemonic on-chain, think about health being represented in a game by a bar graph, but now if you have dynamic NFTs and oracles integrated into that, you can have avatars, grow in size, get more muscular, skinnier, and really the representation of health can be really shown in a different way. So we're pretty excited about that.
So Miles and David have actually explained it really well, right? So at least with YGG, one thing about these NFTs is you actually own them, right? And so YGG is able to actually lend these our assets that we own to communities in emerging markets. And I think that's actually one thing that the space in terms of like gaming and like NFTs can do.
Great point, great point. So moving on to my last question here about digital finance emergence. So to me, it's not only to be digital and decentralized and also truly inclusive, to be able to attract all of our communities, each and every one of us, to be able to use it and to make it more efficient and low cost. So my last question is DeFi the ultimate form for inclusive digital finance? If it's not, can we picture a better form?
Yeah, definitely. I think, DeFi is something that a lot of our users were introduced to for the first time because, gaming, they actually onboarded to crypto through just playing our game in the metaverse. And so just due to the fact that, you can take a wallet from, our game and go use it on Aave or Maker or, whatever DeFi protocol you want, take out a collateralized loan, I think is pretty amazing. And so kind of just like bigger picture, I think, DeFi will be exposed to a lot more users due to gaming and metaverse adoption. And so, we've seen this kind of already play out with the rise of Axie. They were able to onboard 3 million people into their game, and like those people are using the swaps on Ronin, et cetera. And so, I think, for us, we're really focused on onboarding, improving kind of the new user onboarding, especially not only for Web3 users already, but also, for Web2 folks. And I think, going forward, it'll play a massive role in DeFi's adoption.
DeFi is quite interesting. I was a banker for a long time, and I always thought to myself, banks should just become like a utility, like hydro or electricity. The point I'm making there is DeFi at the nirvana state, perfect state, is just going to replace banks. Because banks, what they do is they collect deposits, they loan out those deposits to give you interest, and essentially they take the counterparty risk that you may go to default and they charge you for that. Well, if you think about it, you can completely decentralize that, and that's what DeFi is. So I think DeFi as a utility will get integrated into all sorts of domains, including gaming, entertainment in Web3, in the metaverse. So that's one aspect of DeFi that I just wanted to clarify from my perspective. And then the other thing is I think there's going to be a new form of trade in the metaverse and even in gaming. And it's going to be what I call barter 2.0. If you have digital assets, let's say, that are represented by NFTs, and there's value, and the market places value on that from a supply and demand perspective, why do you have to go through an exchange? You don't have to go through a marketplace. You can directly barter as long as you have a virtual environment that allows you to interact that way. So we're pretty excited to see where that moves to.
Yeah, I'm really excited to see so much innovation going on in DeFi in general, right? From lending to finding like arbitrage in the space and all that. One thing that I probably would spend more time like thinking, at least us as a guild, right, is the problem that the rich just gets richer. What the whales in crypto can just like use the staking part of DeFi to get more rewards. But what about communities, right? In emerging markets, they don't have the same amount of resources in terms of capital, but they do have resource in terms of time. How do we make use of their? How do we, make use of their? How can they make use of their time to be able to participate in the upside of DeFi, right? And so, I believe that the important part here is like the identity piece, so that once you offer loans in the form of uncollateralized loans with gaming assets, and then communities are able to like slowly like earn an income through playing games, then the identity piece would actually know what games do they play with, how many hours do they actually spend, in an application, in an earn application, what skills have they actually learned, like how much rewards do they normally earn, and through those through that data and information, you're able to actually extend other forms of DeFi applications, right, in form of other forms of uncollateralized loans and insurance. Yeah.
Great. So from my perspective, there are institutional traders and then there are retail. So for institutions, regulation is very important for them, right? For them to really be able to trade and scale in CeFi, their licenses, they're protected by centralized government. But for DeFi, regulation is a problem. We're still in discussion, and also on-chain liquidity solutions, right? That's a real pain point right there. And then for retail, the user experiences. Retail shouldn't be able to really feel anything when they're like get onto a platform and they want to trade. You shouldn't ask them to register for like wallets and then this long like key, like everything that I just get overwhelmed. Everything should be solved in the back end. So we're like, constantly looking for new projects solving that infrastructure problems right there. So thank you so much for a informative panel, and this is it. And we still have some time left. Do we want to take a question from the audience? Maybe questions? I think. All right. Thank you so much, then.